Hello guys, welcome back to another video. Today I want to give you guys an update on the stock market. So it's kind of like a midweek market update. So as always, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like me to cover in my next video. Now, if you followed my analysis I did on Sunday for the NASDAQ, the US30, S&P 500 and gold, you'd have probably made some good money there because everything went as anticipated. So look at the US30, we had that drop there. If you look at the S&P 500, we had that drop. Even gold went as anticipated. We wanted to see that clear break. Market broke above that, came back for the retest, completed its double formation, continued higher, tested that level over there. And like I said, there's a good possibility that we could see the pullback and then that continuation, but we are going to do that full breakdown over there as well. But it's important to keep in mind we are currently experiencing the stock earnings season. Now, if you are not aware with how that works, it's basically this time of the month or this time of the year, investors around the world look for strong earnings report, and that's kind of what they look for in the market. So here we can see this is this article from CNBC. It says stocks rally on mostly positive earnings, snapping a 3-day losing streak for the S&P and the NASDAQ100. Now the Dow Jones average rose 1.01%, S&P gained 1.12%, and the NASDAQ composite rallied 2%. Well done for you guys. Hopefully you can keep up that good work. So we are currently in the earnings season, so markets could sometimes be flat up until the data gets released, but there's a direct correlation between the earnings report and the CPI for the US dollar. Why? Because the CPI tells us what consumers are spending. So when consumer spendings are high, which is the PPI that came out yesterday, which was higher than expected, it tells us that consumers are still spending. So we can expect most of the tech companies for their earnings to be quite good. So there is a good opportunity to see this stock market rally in the short term. As for the Dow Jones, that's for the Dow Jones. But in any case, guys, let's jump straight into it. So if you start here on the monthly time frame with the NASDAQ, right? The NASDAQ is literally stuck between this strong level of resistance and support. Now we could potentially see this market start moving sideways and before we get an actual breakout over here. So there's a good opportunity for us to look for buying opportunities either to this level or potentially this level in the market over there. Like, we're going to use that as our take to profit levels. Now on the weekly time frame, what do we see here? We had a massive impulse. So after an impulse, you got the correction. Now the best way to measure that is by taking your Fibonacci from the low to the high of the impulse. So we can see how the market tested, rejected the 0.50. It's also lining up perfectly with this previous level of resistance that is now turned support in the market as well, giving us a further confirmation that we can definitely expect the market to continue higher there. Now if you get our target level over there, you can see we have a -27 that's lining up perfectly with that overextended information or the neckline of that information there as well. But we kind of just want to go short term with this one. If you want to, you can always trail your stop loss according to stocks in the market. Now if you drop down on the daily time frame, there's obviously a contradiction between the time frames that we have over here. So this level over here is currently acting as a strong level of this level of acted as a resistance. Mark broke above, they came to test it as support, then got broken, and it's testing it as resistance. Now as traders, we have to be reactive and not predictive. Now if you looked on the weekly time frame, you would have seen we had that impulse correction and impulse to the upside, right? On the daily time frame, we have this impulse correction and impulse to the downside. Now if you take your Fibonacci from the high to the low of the impulse, we also had a 0.50% pullback that's lining up perfectly with the structure in the market also. Now you can expect the markets to be quite flat. Now there's two ways to approach the situation over here, right? There is a good possibility that the NASDAQ could probably start moving to the downside, then go back up, break above that, and then continue higher, right? So this is kind of what I am leaning towards happening in the market. Alternatively, if the market does give me a clear break above this level of resistance that would then be turned support on the retest, I would then be looking for buying opportunities as well. As traders, we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment as well. So there's a possibility that we could see the market move down, start a consolidation, then finally get that breakout there as well. Next up, we do have the US30 over here. So if you start on the monthly time frame, what do we see? From a monthly perspective, we obviously had this massive impulse to the downside. We had that correction, and if you take your Fibonacci from the high to the low of the impulse, you can see how the Dow Jones we had tested and rejected at 61.8, and it is struggling to actually get that continuation to the downside. This market is also currently trading slightly sideways, so we have the structure on the monthly that the market had created. So this is also a good possibility that we could see this market move sideways, or we could just get a breakout to retest and then that continuation. But we're not here for long-term targets. So if you drop down on the weekly time frame, what do we see? So we got the similar price action over here. Now if you look left over here, you'll probably see that this was a very important structure that the market had created. This level over here acted as resistance, support, broke below that, became a resistance, mark broke below that, resistance, broke above that, all of that resistance then became support. Now you can see how the market is currently testing and rejecting that level quite aggressively. Also have that massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of the impulse, and you can see how the market tested, rejected 0.382, giving us an indication that the upward momentum is quite strong. Now there is a high possibility that the Dow Jones could continue this move to the upside from exactly where the market is now, and that is exactly what we are going to be looking at. Also, if you want to be a little bit safer, what I would suggest you do is, this is currently the previous level of resistance. Now when the resistance gets broken, it becomes support. Now you can wait for the break, and on the retest you can start looking for buying opportunities for the market to go and hit that minus 27 of the Fibonacci taken on this daily impulse as well. Next up, we do have the S&P 500 starting on the monthly time frame. What do we see? From a monthly perspective, we can see how the market had currently tested and rejected that neckline of the information. The market also tested, rejected this previous level of resistance that was acting as support, broke below that. All of that supports now once again turned resistance, giving us an indication that we can definitely expect that move to the downside. But there's also a possibility, because the market is stuck within this range that we have over here, that the market can go and hit that previous level of resistance as well. Now if you drop down on the weekly time frame, what do we see? Now here on the weekly time frame, the price action kind of looks exactly the same. Firstly, if you look left, you'll see over here that this was a strong level of support that became resistance, broke below that, came to test it as resistance once again. As we know, the market also printed this massive impulse and that correction. Now if you take your Fibonacci from the low to the high, you can see how the market tested, rejected the 0.50, which is a 50% retracement of this massive impulse. Now if we adjust our Fibonacci to get our target level located at the minus 27, we can see how this minus 27 over here is lining up perfectly with that previous structure that I had created over there. So there's a good possibility that we can see the S&P 500 also continue this move to the upside. Now like I said before, we have to be reactive and not predictive. There's also a possibility for the market to have printed this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Next up, we do have gold. Now I'm not going to go dive deep into gold over here. I'm just going to go straight to the daily time frame. Now the gold has now most recently printed this overextended W formation. After overextended W formation, you expect to pull back to the left leg. So there is definitely a pullback expected. The only question is, gold still has enough room to move up until that level over there. So we can definitely expect gold in the long term to obviously slightly increase in value. And if you take your Fibonacci from this low to the high in terms of where you're anticipating the market pull back to, you can see by doing so the 0.382 would then line up perfectly with the previous level of resistance that would then be turned support. And after that, we can definitely start looking for buying opportunities for gold to go and hit that previous level of resistance as identified from a monthly perspective. Now that's all from my side. Thank you for your time, and as always, cheers for years.